Okay, welcome everyone to our monthly webinar. This month's webinar is about setting goals and budgeting to make sure you're on track. I'd like to welcome Katrina Arsman, who is going to be hosting the meeting tonight.
Thanks, Deb.
Katrina. Now, Katrina is becoming one of our regulars on our webinars. She presented at our June webinar and gave end-of-year tips. Katrina also demonstrated how to incorporate some of the Pure Bookkeeping System templates into XPM. For those of you who don't know Katrina, she grew her bookkeeping business from scratch to Redfeld in 15 years and has been part of the PB community since 2011. About 18 months ago, she sold her business for $1 of turnover and started Bookkeepers HQ and is forging a new career, taking her experience in the bookkeeping industry and helping other bookkeepers grow a successful business. Some of you have already participated in her seminars and webinars that she runs outside of Pure Bookkeeping, and I definitely have referred several licensees to her for mentoring. So thank you, Katrina, and welcome to our community. I'll hand over to you now.
Okay, thank you, Deb. Thanks for that introduction and for your support as well. And I do love holding these webinars and educating bookkeepers to work on their business and grow their business when it's ready. So tonight we're going to be looking at setting goals, creating a plan, creating a budget, and reviewing the results every month. So let's get into it because there's quite a lot to cover. Once we've started working out this topic, there's hours and hours of information around these topics. So we'll cover what we can tonight. So firstly, with setting goals, and why do we set goals? So goals give us a destination of where we want to go. They help us focus your attention so that you ensure that you get to where you want to go. The smaller goals are then set, so you have stepping stones to get to that end result. Goals give you more meaning to your purpose, and they channel your brain power towards finding solutions. That just becomes clearer of where you're going and how to find those solutions. Also gives you choices. The choices are easier because you have an end game in mind. Notice that most people do avoid setting goals because they do have a fear of failure. So it's something that we do have to get over, our mindset that we just set a goal and just move forward. There is the success in moving forward. Goals need to be SMART, and you've probably heard of this terminology. So they need to be specific. You need to have a clear goal set. So it's a specific goal so that you can achieve it. And then it's got to be measurable. You need to know the measure of that goal. It needs to be attainable, so it's something that you can attain. It's not just some airy-fairy, I want a big business. It's got to be specific and attainable. It's also got to be realistic. You can't just say that I want $1 million business in 3 years or 1 year or something. You've got to keep it realistic to what you can achieve. And it's also time sensitive, so you've got to set a goal and be specific of when it's going to be achieved so that you can use all of these features of the goal to make sure that you do achieve them. Things to consider when setting goals. Where do you want your business to go? So if you don't know the answer to this, then you are just working day to day in a job. So you might as well just be in a job and not have a business. You'll often repeat the same activities and the same frustrations every BAS if you don't know where you want your business to go. You may increase your clients and then you're just working longer hours and you've got no real direction to where you're going. So you need to know where you want your business to go. Do you have a 1 year, a 3 year and a 5 year plan? So I'd love at this stage if you could jump into the chat box or the question box and just let me know, do you actually have a plan, a 1 year or 5 year plan? Be a really interesting exercise to see if people have taken some time and started to think about this plan. And do you want to grow? So within your business, you've got to work out whether you do actually want to grow. You may just prefer to set your hours and say, I just want 25 hours a week and I'm just going to build it to that, and then just set it that. So that might be your comfort level. You might not want to grow any more than that. So just because clients come your way, that doesn't mean that you need to grow because of it. And it's like one of the attendees had just made the comment of getting rid of some of the old clients that they didn't want and choosing the clients that they did want, and not accepting just everybody that asks them to do their bookkeeping, because they're not their ideal client, and we don't want to just take on more noise really in your business. You could also think about what your desired turnover is. So you might want to achieve 500,000 in 5 years. So it's a specific goal. We want 500,000, and it's measurable, or there's a time-sensitive element to it. So we want to achieve it in 5 years. So you've got an idea where you're heading. So once you know the figure or the size of business or the ideal business that you want, then you can develop your action steps to get to those goals. Once you've thought about your business and thought about the goals that you need, you can start creating your plan. So how will you achieve your desired growth and your desired goals? Will you increase your hours available to work? So there are some bookkeepers that can actually increase their hours, that they're not actually full as yet. So you could say that you want extra hours in your business. Or there may be some bookkeepers that just can no longer add any extra hours to their business, or any extra hours to themselves doing any of the work. So you've got to sit down and think about where you want your business. Rather than just saying, okay, more clients, more hours, yes, let's go, let's keep doing it, let's grow your business. You actually got to sit down and think about, well, what does that mean if I increase my hours? How could I possibly achieve this? Like the stress level and the overwhelm will just take over. And is that what you really want? And we tend not to just sit back and plan for our desired growth. We just are more reactive. So what I want you to think about is sitting back, taking some time and thinking about it, rather than just stumbling along day to day, doing the same work, getting into the same frustrations and our overwhelm. So your decisions do have to be made. Ideally you need to sit down and think about it and make some decisions now, rather than just, putting your head down and doing the work. Maybe you intend on employing staff or contractors. So you're getting more hours, you can't do the extra hours, so you need a staff member. So again, you need to sit down and think about, who do I need? What staff member would be ideal? What qualifications and skills do I need from that staff member? What are the hours required? Think about what their job description is. You don't just want to employ a bookkeeper without being really clear on what you need. So you need to take your steps beforehand, just rather than just saying, oh, I've got too much work, I need a bookkeeper, oh, my sister's free, or, the friend down the road is available, she can come in and do some bookkeeping. You really need to think about it. Think about the growth, where your business is going before you actually make decisions. When will you increase your billable rate? I mean, this might be part of your growth. You might be sitting on the same billable rate you've had for a couple of years. So if you think about, well, I've got so much work, I've got a lot of work coming in, maybe it's time to increase your rate, and looking at your ideal business. So you're targeting a certain ideal business at a certain rate, rather than just accepting everybody at the $50 an hour. You need to sit back and think about, what your billable rate is and what does it mean? What's the value that you're giving? Have the confidence to get a good billable rate, and just go for those clients that, will accept a good billable rate, because you're good at what you do, you're confident at what you do, and you deserve a good billable rate. As I say, you don't want to just increase your clientele at a low rate. You need to plan these things beforehand.
And just adding to that as well, of course, with pure bookkeeping, our message has been that they need to be charging in the top quartile. And at the moment, the average bookkeeping hourly rate is around about $50 an hour. So they need to be charging $65 an hour or more just for the basic bookkeeping. And then it would be more for consulting kind of work and rescue jobs and those sorts of things. But in order to run a profitable bookkeeping business, they need to be charging in the top quartile to make the margins better, but also to attract good bookkeepers who they can pay accordingly.
Exactly. And this all needs to be thought about beforehand. You can't just, jump in at the wrong rate. Let's think about, where we want a $65 a rate. We want a different rate for training and consulting. So we need to think about it and then think about the staff that we need for that as well. Can you increase your billable time or productivity? Do you actually know what your productivity rate is? Do you know what your billable time versus non-billable time is? Have you been monitoring this? Or maybe we need to create systems to monitor what your billable hours are. Do we just, we do 10 hours of work for a client and say, oh, look, I'll only charge them 6 because it shouldn't have taken me this long? Do we have a way of measuring this? Again, you need to sit back and working on your business. I can guarantee you will improve your bottom line by actually stepping back and not working in your business. If you work on it, you will make a lot more better decisions.
Yeah,
that will make a lot more difference.
And also, Katrina, if I can add there, this was something that we tracked to the minute in my business, and Pete would often use the analogy, if you were saving up for something like a house or something, a special holiday, and you won't be able to save the money unless you know where you're spending it first, because if you end the week, the pay is all gone and you don't know where you've spent your money, you can't make decisions about where you would or wouldn't spend the money. It's the same with your time. If you don't track where you're spending your time, you can't make decisions about, is that the best use of your time? Is it going to get you towards your goal? What time where are you wasting the time? How much unbillable hours is there exactly? Because that's money just going out of your back pocket.
Yeah, and you don't know that until you actually spend some time thinking about it, looking at it, measuring it, setting up systems. And you can't do that if you've got your head down working in the business. So it's really important to allow yourself, give yourself that freedom, and you choose to work on your business, make it more profitable, make it more exciting, make it a better working environment, a better working life for yourself. And it can be done. Have you considered offering additional services? So currently you might be just doing your bookkeeping and adding in your BAS, your compliance work within your bookkeeping. So, maybe we want to work on getting more training clients or consulting. And I can guarantee a lot of you are already doing the consulting work, but you're actually calling it bookkeeping. So consulting work, in my opinion, is anything other than data entering and reconciling. So if you are, setting up systems with them, talking about new softwares or add-ons, or, setting up their inventory, that's not bookkeeping, that's more consulting. So just think about the differentiation of the different services that you already provide and label them differently, price them differently, offer them differently. Can you possibly move to fixed fees, or do you want to move to fixed fees? When I first started with the fixed fees, I just started productizing some of my services. So my BAS service, I productized it so it became $250 to review, prepare and lodge the BAS. So it was based on 2 hours to review and prepare the BAS at $100 an hour and a $50 lodgement fee. And then I productized my payment summaries and my IAS and payroll tax lodgement. So it's starting to create that fixed fee environment, that it's a set fee and you'd sell it at a set fee. Maybe there's other clients that you're doing monthly work for that you can also turn it into a fixed fee environment. It might not be your whole client base, and you might not want to jump in too quickly for too many things, but have a look at past invoices that you have invoiced a certain client, and maybe you can move them across to what we would call a fixed fee. There's a whole story about fixed fees and value pricing, which we won't go into today. So there's a lot more than that. But that's, start to think about how you can, just be a little bit smarter and just you getting your income in a different way. Okay, so now we'll move over to the budget and why do we budget? So we budget to forecast where we are going. We want to keep ourselves accountable. So we work out what our income is and our expenses are for the next 12 months. So we want to be kept accountable to that. So let's say we've got $10,000 next month. So we're always reviewing it to see that we've actually got up to that type of income. We've also got a base to compare our actuals to. So we've actually done 10,000 and we estimated we're going to do 8,000. Well, it's a bit of a woo-woo factor. It's, and if it's a bit less, well, then we strive for a little bit more the next month. So we're always, in our mind, we're focused on trying to achieve our goal, which is now being put down into our budget. A budget will also let you identify issues that might arise. So there might be times where you have a bit of a cash flow problem, or we need extra help, that that you're going to have a lot of income or a lot of work done in a certain few months. So we can say, okay, we need staff for those period of times. There's a lot of different things that we can identify if we've got a budget. So if we've got the fluctuations of up and down of a budget, well, we can work out when we need to target some more cash or some more staff or a new computer, those type of things. And we can use it for use the management reports for growth as well. So we know when we're going through a growth spurt, or you can recognise if you're actually targeting to head towards a growth spurt. If you say, well, next month I want 10 more clients, well then how are you going to provide that service to them? Are you going to need a staff member? Or maybe, February, that you're going to be at the next level where you can't manage it all yourself, or you and your staff, your current staff. So that you do need to put another staff member on. Usually comes around, June, July. July is going to be crazy, and you've added new clients as you go all year, but you haven't added the staff necessarily. And then you're going to come into July and it's going to be crazy. So we're budgeting for, that income growth, that client growth. But we also then need to say, okay, I'm actually going to need a staff member. So when is the best time to put that staff member on? Before. You obviously need them, 4 to 6 weeks before you actually need them, so that you can simulate them in, train them, make sure that they're used to the clients and do all of those things. So it gives you those type of ideas before it happens. So rather than being reactive, you're proactive. Okay, so we're going to go into setting up a budget. So when we talk about doing a budget, ideally you do it before the new financial year. So, but it's never too late to start a budget. So if we do it around May or June would be the best time to do it, to think about the new financial year and set some goals. But it's never too late. If we start now and do it for the next 9 months, well, that's an ideal time. It sort of makes sense to start now. And we start earlier, or we can start now, so that because it does take some time to learn how to do the budget, and you are wanting to evolve and tweak it over time, so that next time you do a budget, it's going to be a lot easier, and you've got to have learned some of the the mistakes and, the efficiencies and, how you can do it better. So as I say, each time you do a budget, you will get better at it, and you will do more work around it as well. I'll explain that while we're creating the budget. So how to create the budget. So we open up the previous year's profit and loss, ideally, the multi-period profit and loss. And I like to create income accounts for your income stream. So if many of you have done my Xero Practice Manager webinar, you know that I like to, within there we have job categories that explain each one of our income accounts. So the income account streams that I like to do is all the type of services that we provide. So we've got bookkeeping, there's an income account. We have BAS work, year-end procedures, consulting, training, your software subscriptions as well. So rather than just having a profit and loss that just says sales, it's a good idea to break it up into your income streams. And that becomes our base for, setting up our budget as well. Now we're going to look at our previous financial year, and we're going to look at the ups and downs of your income by month. So in July and August that we're going to have more income. September might still be up quite high because you're still doing some year-end reviews. In October and November, we've still got our BAS. December might be down. December was always a period where I had a lot more consulting than I did bookkeeping. So I can look out for that when I'm actually preparing my budget. I'm looking out for income is increased for consulting. January might be a little bit lower because we've got a couple of weeks off, and then February is really high. So your ups and downs of your income by the month. You could consider evening out these fluctuations by bringing in fixed fees, for example, so you're evening it out over the month. Perhaps invoicing more regularly. So a lot of the time you are too busy doing your work that you don't actually do your invoicing. So it's a good idea to invoice as work has been completed, for instance, rather than waiting to a next opportunity to do your invoicing. So I would invoice weekly so that I didn't invoice all the clients in 1 month. So you have to even out your cash flow as well. Some bookkeepers invoice weekly based on the work that they've done for that week, whereas I invoiced based on the work that was the jobs that were completed, but they were still invoiced weekly. So at least I'd spread the work out over the 2 months of the BAS, and I'd have more of an even income for the BASs rather than invoicing everybody's BASs in August and November, that type of thing. But you would have an idea of your own fluctuations and how your months sit. And you start with your annual turnover in mind. So if you have set a goal that you want to achieve 120,000 by the next financial year, then we know we're up for 120,000. And then we're just breaking up your income into the months and into the income stream. So again, we know our fluctuations. So July, August is high. The other months, have their fluctuations as you go along, and we're wanting to aim for 120,000. I'd also suggest that you break it down into income streams as well. So, we're going to separate it into bookkeeping and BAS work, for example. So your bookkeeping could possibly be the same amount every month. It could have its ups and downs for your clients. But you get an idea of, how much bookkeeping you do, how many hours in bookkeeping you do, and how many BASs that you lodge. So if you lodge 40 BASs in a quarter, then in my scenario, it's 40 BASs times $250, and you're going to break those down over a couple of months. So it's $10,000 of BAS, and you might do 4,000 in July, and you might do 6,000 in August. So you're starting to analyse where your income is coming from, and you can then start to think about, if I've got to achieve 120 and I've only got 80,000 last year, then I need to increase my bookkeeping. So I need to get some weekly bookkeeping or some more monthly bookkeeping. You can also look at your training. So maybe you're only doing a little pitter-patter of training throughout the year. You think, I need to up my training because that will also up my turnover. So I need to aim, or my goal is to get 5 hours of training a month, or, you know, whatever your goal is. So you can start being specific when you're doing your goals and your budgeting as well. And also you can start to create working paper. So you might not want to do this as your initial budget that you do. And I didn't for my initial budget. The first budget I did, you know, 10,000 here, 12,000, 14,000, 2,000, 10,000. So I went up and down as my fluctuations were. And then when I got more comfortable about how my budget worked and that I was, you know, meeting budget, I was, you know, I wasn't too unrealistic. I was really achieving what I wanted. I wanted to get a little bit more specific. So I created an Excel spreadsheet of all my clients and the bookkeeping hours that I would take to do their bookkeeping. So I'd place that along my Excel for every month, every client, and then the BAS. I'd know that I have to do a 250 for every BAS. That's every quarter, so I know where they sat. Year-end procedures, I knew they turned out in July or August. I've got all my payment summaries and WorkSafe and all the year-end procedures you do. So I knew where they were going to sit, and I knew that, you know, each client might be, you know, $500 or $300 based on what you did for them. So I began to become really specific about the income I was earning for that client on that Excel spreadsheet. So that's another way of creating the budget as well. Then once we've done our budget, we can review it. So we can, ideally you want to review it every month. So you consider the results and you think, well, do I need to take action now? Do I need to market for more bookkeeping because I'm below target? Have I just, you know, sat back on my laurels and said, oh, well, I'm just doing the work that I'm doing, but, you know, I've got this 12-month goal that I want to get to 120, but I'm still sort of only going towards 85. So, you know, what do I need to do to get there? I need to, it won't just happen. You need to think about, maybe I need to do some more networking. Maybe it's time to put up my prices. Maybe I haven't pushed the training enough. So it gives you an idea of what action you do need to take. And also, you know, what are my costs? Do I need to get into a rental, you know, out of my home office and get into a rental property? Do I need a staff member? Because it's a staff member. You don't just hire a staff member like that. Oh, I've got too much work, I need a staff member. The budget and your goals will tell you when you need your staff member. You do need to sit down and think about who you need, as I said, but, you know, having a plan will help you know when you need that person. You could also review it with a trusted person. So, you know, that could be your partner, could be a friend that has some financial nous about them, or, you know, you could hire a mentor so that you could sit down and think about, you know, what have I achieved and what do I need to achieve in the future, you know, to get to where I want to go. So if I bring across Xero and have a look at the budget manager in Xero, I can give you an idea of how to set up a budget. Okay, so it's under reports and under budget manager. And it's quite easy to just type in the income. So you might just go $1,000 and you could just carry that across. And you've got some extra formulas here. So you can say, I just want $1,000 that will go right across. I want to adjust it by a certain percentage. So let's say I want to adjust it by 5%. So that will push that across at 5%. Oops. and I'm not sure why it's not updating that.
I think the first box, can you go into that arrow there, Katrina? That, yeah, the first.
Oh, okay. And no, I don't think that's going to work. I'll put $1,000 and
Okay.
do a 5%. Is that going to work? Oh, okay. We've got the 5% over here, so it's 2 months down the track. So I'm not sure what happened there. Let's assume it's all working nicely. And then once you've, like we've only spoken about your income at the moment, and then you would put in your wages under cost of sales. So to be all your contractors and staff would go under cost of sales, and your wages as well. So what do you expect to get from your business? So, you know, you may be in a position to say, okay, if I was in the real world, I would expect, let's say, 100,000. So you could plug in your wages of $100,000 in there. As you are building your business, obviously you wouldn't take that amount, but what are you expecting to take out of it? It's usually your profit amount, but it's important to put it in as a wage so that you do cost yourself into the profit and loss, into the budget, and you're also taking money out. So you're entitled to take a wage from the business. You don't want to just pretend that you're just getting the profit from the business. You actually want to set a wage. Now, all the expenses, you can base them on last year's multi-period profit and loss as well, with some increases for certain things. You know what your subscriptions are and your bank fees, your accounting fees, a lot of these things that you already know. Your telephone's already set in stone. Your rent, you might decide in 6 months down the track you want to put some rent in there. Travel, if you're going to Xerocon or, you know, the ABN conference, you can budget for all of those things as well. So you can either do it within Xero, or you can export this out to Excel and punch it all in there, which I've got my Excel spreadsheet here. So you can punch it all in here, work out, it'll give you the formulas as well, do it all in there, and then you can import it back into Xero, for instance. And then you've got in your profit and loss, you do have the option to compare with actuals. So you're probably all familiar with how to do profit and loss and compare with, that might not be the right one to get, these new reports. Do your head in. Okay, so we've got overall versus actual. So, you know, we're looking at our actual versus our budget and our variances and things like that. So these are the reports that you do want to look at every month.
That's really helpful. That's and it looks so easy to have that at your fingertips, have that information.
Yeah, it is. It's once it's in there, it's the getting it done is the biggest challenge. And we've I thought this was going to take very much longer than it has, Deb.
Yes.
So we're up to the end of the slides because I think I've probably rushed through.
All right.
So is there any particular topic of that we want to cover?
Certainly I can, if anyone has any questions, by the way, if you post them on PB Central, I'll just check now. Haven't seen any questions there. I'm interested to know from everyone that's here tonight, there should be a little hand there where you can put your hand up. Who's actually already firstly created goals for 2016-17? Can you put your hands up? Ooh, that's looking quite reasonably. Ooh. Is that everyone? Everyone's put their hands up? That's actually probably about 30 or 40% at a rough calculation. So there's probably, and certainly I know Katrina, you touched on that the fear of creating a goal. And for me, it was particularly strong. I think most bookkeepers would feel the same way. One of the things I struggled with was that I was afraid that I would fail. And because typically bookkeepers, everything is right or wrong or black or white. Our world is like that, our professional world at least. And, you know, it either reconciles or it doesn't. You need to go and find it. So you get really consumed by things being right or wrong, and you translate that into running your business as well. And that really can stop us from growth and projecting forward and creating the goals. Pete and I always met in January each year to create our goals, and we spent the best part of a day in January creating our goals, and then we would review them every month, as Katrina has said. But it was excruciating because I didn't know what the right number was. And it felt really, really uncomfortable. Just hands up again, who can relate to that feeling? Yeah. Actually, that's that's pretty much at least half of you, and probably the ones who haven't set goals, I would suggest. So what I would recommend you do is, as much as you possibly can, treat it as a game. This is a game that you're playing at the moment, and it's the game of growing your business. And the game, you can use the business blueprint. If you don't know what the business blueprint is, send Paige an email and she will email you a copy of that. That's basically a roadmap to growing your business, where we talk about putting on a belt each year using a martial arts metaphor. But it's actually a really useful one-page business plan, if you like, where you can visualize where you want to go. You can visualize your goals. So Katrina talked about turning over $500,000 in 5 years, and that's very doable if you go hard at your marketing and you've got all your systems in place. You could definitely, that's a doable goal. So get the business blueprint, and if you're on, let's say, close to 100,000 now, then the next belt is 200,000. So without hesitation, I would say just go for it. Use the business blueprint as a guide, and if you're on 100,000 and you're ready to go hard, it depends on how hard you are able to go. Sometimes if you've got other commitments, you might have children at home and things like that, and you can only work a certain number of hours, then you would modify that. But if you've got 30 hours a week to spend growing your business, and you can go hard and you're prepared to do whatever it takes, you can add $100,000 to your turnover each year. So if you're on 100,000 and you're prepared to do that, then aim for 200, and work out something in between if you can't, as I said, if you can't quite aim for that. And just lighten up about it all. It's not in concrete. It is something that you change, and as Katrina said, you do have to monitor it every month. Are you on budget? Are you on track? And modify it up or down. So, and just reiterating that she said that if your turnover isn't what you expected or what you planned for, then the solution to that is marketing. And if it's blown right out and the turnover is much more than what you've surpassed your goals, then you may need to consider recruiting earlier. So there are solutions to those issues. So use the blueprint as a guide, have fun with it, and modify your goals as you go along. When Pete and I were working this out, we would then review it every month, and 3 months and 6 months and 9 months and 12 months were also key times to review it. And when we got to June, we would look back on the last 6 months, how we went, and project that out forward, say, well, okay, based on how we've been. Are we on track? Do we need to increase our marketing? Is it time to recruit? What other things are not working that we need to fix before we can grow some more? And then in June, we would extrapolate that out to December, but also take that another 12 months. So we were basically doing this rolling 12-month budgeting and goal setting. So every January and every June, and then we would assess that in December and look back how we went over that 12 months and take it down to June next year and down to December the following year, if you can get my drift about reviewing it. It is absolutely critical to be tracking every hour that you spend everywhere, every minute that your staff are spending on anything. They should be 100% billable unless you have chosen them to do specifically some kind of admin or supportive role. But I would recommend, if that's the case, they are at least, they're billing out at least half their time, so they're cost neutral. All of that stuff's really important, and keeping track of all of that is vital. So have fun with it. Don't get so serious about it that it stops you. Just do it, as once again, as Katrina said, she said, just do it, and reassess. And on a personal note, you would all know, based on the book, The E-Myth Bookkeeper, that my really big goal, so my kind of 15-year goal, was to replace my husband's income. Now, I set that in something like 2002, when I'd only been going for a year or so at that point, but it was important to me because he was in a stressful job, and long term, I thought I would be the one that would be able to take over as being the breadwinner of the family, and he could retire. But I didn't know really if that was a pie in the sky thing. It was kind of for me, but as it became more tangible, more realistic, I actually over the years I put a date on it, and I said 2010 was when I was aiming for him to be able to retire, and 2010 came and went, and I didn't achieve that goal, but I didn't give up. I mean, you could say, well, you're a failure, Deb. You didn't achieve your goal. You know, there's nowhere near retiring yet. But I kept that goal there. I pushed it out again based on what had been happening in my business. Okay, it didn't happen in 2010, and when it did happen was 2014. So was I a failure because I was 4 years late? No, obviously not. And if you set a goal of going from $100,000 to $200,000 and you reach 150, have you failed? No, you haven't. You've done exceptionally well. Reassess your goals and make new ones for the next 12 months. Stretch yourself. Work out what worked in the last 12 months, and create new goals. And just drop that failure thing. And the fear thing, as the picture said, fear is a liar. It's just trying to hold you back. And as you can hear from my voice, I'm very passionate about this. Now, there's just a couple of questions. Eve, yes, when I talked about 100K, no, I'm talking about 100K turnover, not 100K profit. So when you're aiming in the business blueprint, we're talking about, when we talk about adding a belt a year, so adding $100,000 to your turnover each year. Yep, cool, you've got that. Any other questions? Let me just check to see if anyone. So all of you people who put up your hands and said you posted goals, prepared goals, you have goals, and has anyone created a budget? Just put your hands up. Do you work with budgets with your goals? Okay, that's probably maybe about 20% of the people who are present tonight have set budgets. Hopefully now you'll realise how important it is to set a budget. and to match that up with your goals. It's a critical part of working on your business. When we talk about best practice bookkeeping, part of best practice bookkeeping is not just the bookkeeping that gets done, it's how you run your business. And another, as you well know, my business nearly went bankrupt in 2007 because I lost track of this in a very short amount of time. I made some bad decisions about putting bookkeepers on when I didn't have enough clients for them, so they weren't billing out all their time. I put on an admin manager because I had the wrong model, and we needed supervisors to check the work, so I was paying supervisors. All those things nearly sent me broke. And the only reason actually I didn't go broke was because I had to dig into my mortgage and put $30,000 into my business. Don't do that. We want you to be profitable at all times. So you need to be charging in the top quartile, and you need to be tracking where your income streams are. I love that idea that Katrina said about creating the different income streams. I did that myself as well. I had a separate income stream for rescue jobs as well as maintenance, what I call maintenance bookkeeping, which is just the day-to-day stuff. So, and this is kind of linked to my own KPIs, which I did a webinar about that last year sometime on to explain what my KPI report was. That might be helpful to the listeners here as well. You can find that webinar in the resources section of PB Central. I'm going to hand back to Katrina now, but before, and I will be closing right at the end, before you do leave, I would love you to post on PB Central what your goals are for this current financial year, and also what you got, the one thing you got out of this webinar tonight. So Katrina, I'll just hand back to you, and you can tell everyone a little bit about the other services that you provide.
Yeah, sure, thanks. And also I want to mention about the setting goals. You're doing a plan for a year, then you start chunking it down so that they become not so overwhelming. So you're not just trying to achieve 120,000. You're actually trying to achieve 30,000 in 3 months. Or you're trying to, putting on a staff member. You're not just saying, I'm going to put a staff member on during the year. Break it down to identify when and who. The same with your systems. Like, I use Xero Practice Manager, but whatever system that you use, it's not going to be up and running within a week or within a month. And maybe your goal is at the end of the year that you have a systemized, automatic bookkeeping business. Autonomous.
Yeah.
But it doesn't happen like that. So break it down. So in 3 months' time, I would like to identify what my systems are and have my checklists in place.
Yes. And sorry, go on.
Oh, then I was just going to say, then, the next 3 months, then you expand on that and say, well, I want my checklist not just for my bookkeeping jobs, but every other, work that I do within the office. How do I employ people? Like, have all your checklists that it just expands on all of your systems, but it's not all at once.
Yes. Yeah, having systems for the back end of the business is absolutely critical, and not only for the smooth running of your business, but also if you want to get to the stage where you don't have to work in your business anymore, so you can have a second in charge, a 2IC, take over from you, and they will follow those back-end administrative systems to make sure the business still ticks over when you're stepping out and doing other things. One other tip that might be useful here, just very quickly, is what the way Pete and I worked out some averages, if you like, in my business, which I found very helpful, was in my business, and this is something that it will be individual depending on your target market and your clients, but on average in my business, a client, I was able to bill a client about 10 hours a week. That's what we worked out. So that was made up of monthly clients, weekly clients, fortnightly clients. I worked out how many hours I did in the month, and on average, that meant this many hours a week. And if you work out that times your turnover, times your average bookkeeping rate, you can then work out how much income on average you will earn each week. And if you want to increase that turnover, well, then you need to increase the number of clients that you are going to put on. And that leads to marketing. So then for me, when I knew that in order to reach this amount of turnover, I needed on average this number of clients to be able to add that amount of turnover to my income, then I would be able to work out, well, okay, how many accountants am I going to meet this week? How many referrals do I need? How many prospect meetings do I need to have? Because there was a conversion with the prospect meetings. You didn't convert every prospect meeting. So you can actually work it down into the really detailed as to what action am I going to take this week and also today. So as Katrina said, you chunk that down into bite-sized pieces so that you feel empowered to take action based on where it is, where your destination is and how you're going to get there. And the other thing that crunching those numbers that way also helped me then to determine, okay, at this point I will need to put on my next bookkeeper because the average bookkeeper did this many hours per month. So I knew I would need, if I was putting on this number of clients, at this point in 3 months' time, I'm going to need another bookkeeper. It's not an exact science, but the more precise that you can get, the better, because it's variable to what actually happens in reality, and you may not hit that goal or you might go over. So it can be a plus and minus that, but it at least gives you a clear picture of what you need to do and breaking that down into actions. And now I'm going to stop speaking because this is a topic that I'm passionate about as well. So I'll hand back over to you, Katrina, to just tell everyone about your seminars and other things that you're doing.
Yeah, thanks. Yeah, so just to summarise how extremely important it is to have a plan and a budget for the future. So we've given you some tools of how you can start that and some ideas. But I understand that some people will jump in and start and work their way through that. Others will, they don't have enough time, or they'll make excuses and they'll want to do it, but they just won't get to do it. And others need more direction to help get it done as well. So I remember how I felt when I, was overwhelmed with too much work and kept getting new clients. And it wasn't until I engaged a mentor that I valued the importance of working on the business rather than just in the business. And he immediately said, you need to employ another person like yourself to do all of the review work and the consulting work. And it was just that reassurance that it will be okay, that you put on another person, your income is there, they will do that income, you will be able to go out and get more ideal clients and work on your business as well. So it's just having that reassurance of talking to somebody about that's sort of an independent person that has that rational opinion. So what I have got to offer today is that I'd like to offer a complimentary coaching session to see how I can assist you. So I'd love to be able to speak to everyone on the call individually to identify where your business is up to, share my experience and how I could possibly help you. So I think Deb has put up a link for my calendar.
Yeah.
Just jump onto there's a link there. You jump into a calendar and book a time, a day and time that suits. That I would, this is a complimentary, so it's the full coaching session or a 45-minute coaching session to have a look at what your business is, where you're having your challenges at the moment, and perhaps we could work out a plan to help towards, a few of those challenges.
That's very generous, Katrina. Thank you very much for offering that.
Yeah, no, that's my pleasure, because I want to be able to help the bookkeepers that are struggling, they'd like to work out where they're going. They might not even have the direction yet, or just overwhelmed and just putting their head down and working.
Yeah.
When you've been mentored and you do appreciate how important it is to work on the business, that you get a lot more success. The working life is a lot more pleasant, and you can actually see the light at the end of the tunnel without just working harder. So it's just allowing yourself that time to sit back and analyse your business, where you want to go, and make the right choices before you get stuck into a business that you don't enjoy and work you don't enjoy, and then you lose the pleasure out of your whole working life. You get stressed to the max, and it affects your family life as well.
I've just posted that, Katrina. It's in the chat box there. Just click on that link to get to Katrina's calendar, and I've also posted it on PB Central in the same area. So if anyone gets that tomorrow.
Excellent, thank you. There will be limited sessions available, so either follow the link, or you can email me your preferred time. Be first in, best dressed with the possible sessions that are available. It's really only for the next week or so that I'll be able to hold these sessions. And I hope this has inspired you to really think about your business and make the decision to set aside some time to actually do some planning for your future success, rather than just, the business is leading you. Let's see if you can lead your business to where you want it to go.
Thank you so much, Katrina. Is there anything else you wanted to add?
No, I think that's all. I've got my contact details there.
Fabulous.
You're probably already aware that I've got the Facebook groups, and I do Xero Practice Manager webinars. I've got another one tomorrow.
Well, on behalf of all the licensees, not only those who attended, but also the ones that will be watching this recording later, thank you so much for giving up your time to present some really practical and useful tips on setting goals and creating budgets, and for your very generous offer of limited places available to book a coaching session with your compliments. And we, on behalf of everyone in our community, I'd like to thank you very much for that and for being part of the webinar tonight.
It's my pleasure. I really enjoy doing this and working with bookkeepers, and seeing where we can go together.
Terrific, thank you. And we're going to sign off now. If anyone has any other questions or comments, please post it on PB Central. Katrina participates in that all the time and answers questions. And also post your goals, share it with the community, give some accountability for your goals, and congratulations, by the way, on each one of you attending with only a few days left for the end of year BAS lodgement. That's working on your business and prioritising that. So congratulations to you all. All right, thank you everyone. The next webinar will be next month, and we will send you the details of that a few days before. Have a great month, and we'll see you online. Thanks everyone. Bye for now.
Bye.